Hello, and thank you so much for joining us on this program. This is Capital Market, and it promises to be another profitable 30 minutes of delving into happenings in the capital market, and it's live here on Channels Television. I'm Ini John Mekwa. Well, let's start right off with some numbers from the global equities market, where European market closed high on Friday after Federal Reserve Chairman Jerome Powell indicated the central bank was likely to begin withdrawing some of its easy money policies before the year end. The European blue chip index began Friday's session roughly unchanged from where it started the week, with markets in suspended animation ahead of the Jackson Hole meeting. The German DAX rose 0.37%. The UK's FTSE was 0.32%, while the French CAC also edged higher, 0.24%. On the economic data front, French consumer confidence pulled back fractionally in August. According to the National Institute of Statistics and Economic Studies, the monthly consumer confidence index slipped 99 from 100 in July. In Asia now, Pacific markets traded mixed on Friday as investors remained cautious ahead of the Federal Reserve's annual Jackson Hole Symposium, where Fed Chair Jerome Powell was due to speak. The Nikkei 225 in Japan fell 0.35% to 27,641.14 points, where the Hang Seng Index in Hong Kong was down 0.18% in late afternoon trade. Meanwhile, Chinese mainland shares rose. The Shanghai Composite advanced 0.59%, while the Shenzhen component added 0.15%. Meanwhile, the United States stocks rose on Friday, heading for a winning week as the Federal Reserve prepared the market for the central bank to pull back on some of its monetary stimulus, saying it's likely to start tapering its $120 billion in monthly bond purchases this year. The Dow Jones Industrial Average gained 0.69% to 35,455.8 points. The S&P 500 rose 0.88%, led by energy stocks to hit a new high, while the Nasdaq Composite added 1.23%, also hitting a new record high session on Friday. The three major stocks averages closed the week in the green. The Dow finished up 0.9%, while the S&P 500 added 1.5%, and the Nasdaq Composite gained 2.8%. The 10-year Treasury yield, which ran up this week into the Fed speech, eased slightly after the Fed chief's remarks, as he made clear that interest rate hikes would not immediately follow after tapering was over. And coming back home now here in Nigeria, the local stock market, the bull had a slightly weak grip on the market as investors gained only 1 billion naira in 1 week amid mixed trading session. The market's benchmark performance indicator was slightly high by 0.01%, very marginal compared to the preceding trading week. Activity levels were mixed as trading volumes rose by 16.7%, while value traded declined 33.5% week on week. Bargain hunting activities were observed in stocks of First Bank, Access, Zenith, and MTN Nigeria. However, UPDC PLC topped the gainers chart, while Associated Bus Company led the losers. The market sectorial performance was mostly positive, following gains in insurance, oil and gas, banking indexes, while the consumer goods and industrial goods indexes closed in the red. At the same time, the trio of Sovereign Trust Insurance, Mutual Benefits Assurance, and Transnational National Corporation of Nigeria were the major contributors to the total turnover volume and value of shares transactions, as they accounted for 247.73 million shares, worth 114.4 million naira in 809 deals. Well, still on the local equities, the Nigerian Exchange Group on Wednesday celebrated 60 years of enabling Africa's largest economy as a leading integrated market infrastructure group in Africa. The group officially commenced operations on the 25th of August, 1961, as the Lagos Stock Exchange, following its establishment in 1960. Well, let's talk more about this and see how the celebration, if it's worth celebrating after 60 years. Joining us to talk about it is the Professor of Capital Market joining us, and also the President of Association of Capital Market Academics of Nigeria, Professor Uche Uwaleke, joining us from our Abuja studio. Professor of Capital Market, thank you so much, Prof, for joining us this evening.
Ini, good evening. Thank you for inviting me to be part of this conversation.
I guess we should say 60 years. Congratulations are in order.
Oh, very much in order, Ini. The exchange, no doubt, has recorded a number of milestones in the last 60 years. So it's the Diamond Jubilee is what celebrating. Just as you mentioned, this is an exchange that was incorporated in 1960, and by 61, on the 25th of September, it opened its doors, for business. And since then, it's been a fairly good good ride. Recall that in 1977, the Lagos Stock Exchange, then Lagos Stock Exchange, got renamed as the Nigerian, Stock Exchange. By 1984, another major milestone was recorded. By 1984, the benchmark index, the OSHA index, was introduced. I also recall that in 1997, another major one that readily comes to mind, in 1997, when the subsidiary, the Central Securities Clearing System, came on board, and of course that facilitated the automated trading system that followed in 1999, and the transaction cycle that got reduced, to the present T+3, by year 2000. So all in all, it's been a fantastic story. If you also look at in terms of progress made, this is an exchange that started with just 19 securities listed, but today we are talking about over 300 securities. In terms of boards, the boards have also been increased. Today we have the premium board, we have the main board, we have the ASEM, that's the alternate securities markets, and then later the growth board. In terms of products, the menu of products, asset classes, has increased. It used to be just equities and bonds, but today we have exchange traded funds. And in terms of market cap, the equities, as we showed there, is over 20 trillion, bond over 18 trillion. So you have a market cap of over 38 trillion. So products diversification, yes, to a large extent, including exchange traded funds. And recently we've also seen, derivative contracts, that about to, commence. And you also notice that the infrastructure has also been modernized. I qualified as a broker in 2007. And as at that time, I trained under the old order. The trading engine then used to be called the Horizon. But of course, it's no more the case. Now, the trading engine has been changed to the X-Gen, which is modern, which has a lot of modern features. Today, brokers don't need to go to the floor to trade. A lot of them do remote trading. As you know, despite the COVID-19 challenge, trading was not disrupted. The market was still on. So in terms of IT, optic, the exchange is, you can say, is IT driven. And of course, the climax has come by way of demutualization from a member-owned company limited by guarantee. Today, the exchange has refocused. The exchange is now a public company limited by shares, and of course, with all the positive implications, that comes with. But of course, all this wouldn't have been possible without the effort of the stakeholders, just as the exchange rightly recognized in the statement that it issued, talking about even the members themselves, those with license to trade, the stockbrokers, talking about the regulators, especially the Apex regulator, the role of the Securities and Exchange Commission, and you can also talk about the issuers themselves, whether companies or the government, and of course in the media. The media has played a lot of, a great deal of role in ensuring that all this come about. So I'm talking about the media. I want to specifically single out Channels Television and NTA. These are two TV stations I know that have programs dedicated for the capital market.
Thank you so much, Prof. Thank you. Thank you.
Kudos to the print section of the media, the Association of Capital Markets Correspondents Association of Nigeria, the CAMCAN. All of these people have helped, to the success story of the exchange today.
So thank you so much for the recognition. We do appreciate that. But let's talk about the impacts now. To what extent would you say that the exchange has contributed to the development of capital market and the economy in general?
To a large extent, to a very large extent, as you know, the exchange is mainly the platform, and it's a platform that helps to mobilize, funds from, as we say, financial markets exist to mobilize funds from surplus units to deficit units. So the exchange has been playing that role in terms of, providing the platform for doing that, over these years. As you know, a lot of issuers come there to raise funds. By issuers, I mean companies, including the government. The government of Nigeria, both federal and state governments, have been raising funds, from the capital market, and that is also partly enabled by the exchange. So that's where you can see the role of the exchange. The exchange, I'm also aware, has also been involved in even boosting capital market literacy, financial market literacy, and by extension, financial inclusion, through its activities. The exchange has, what they call the X Academy. I'm aware that the X Academy has been, in the forefront of, sensitization through workshops, through seminars, and so on, and through webinars in recent times about, capital market activities. And of course, that way it has helped to, improve financial literacy and financial inclusion. So in summary, I would say that the exchange has the flagship boss in Nigeria has played a major role in capital formation process in Nigeria.
What about comparing the exchange with others in Africa? Can we say we are a shining star?
Yes, I subscribe to that word. We're actually a shining star. As a matter of fact, I returned from Ghana yesterday. I visited the Ghana Stock Exchange, located on the 5th floor of Cedi House, along Liberia Road, in Accra there. Yes, the Ghana Stock Exchange is doing well, relatively well. But compared to Nigeria, Nigeria is still, miles ahead. Talking about, let me even talk about African exchanges. As you know, Africa has about 29 exchanges. 21 of them are members of the African Securities Exchange Association. That's the, the ASEA. And the continent also has 2 regional exchanges. You have the BRVM that caters for the one in Abidjan, French-speaking countries, especially in West Africa. And you also have the BVMAC, the one that is in in Gabon for Central African Republic and some other countries, in that region. So if you take all these together, you will see and compare them with Nigeria, whether in terms of market capitalization, whether in terms of number of listings, whether in terms of even liquidity, turnover, and the rest of them. You would find that the Nigerian exchange has done remarkably well, given its age. I say given its age because the oldest exchange in Africa is the Egyptian Stock Exchange that was founded in 1883. You also have the Johannesburg Stock Securities Exchange, which is the #1 in Africa. That's the only one that is ahead of Nigeria. It was founded as far back as 1887. Okay, so you can see the age when I talk about age. And the Casablanca Stock Exchange in Morocco, in 1928. So if you look at all of them, and even the Nairobi Stock Exchange in Kenya, 1954, they're all older than the Nigerian exchange that we have. And as I said, if you take the metrics, if you take the criteria and assess them, you'll find a Nigerian exchange, is about the number 2. So in terms of
because I think recently Kenya received
perhaps Egyptian exchange.
Recently,
but, market cap. Yes.
Recently, Kenya received an applause. The Kenya exchange received an applause on the continent.
Yes. As I said, Nairobi Exchange is also one of the flagships we have in Africa. If you talk about the big exchanges in Africa, you are talking about South Africa. You are talking about Nigeria. Kenya is there. Egypt is there. Morocco is there.
All right, Prof.
We also tend to include Zimbabwe and Zambia. So in all, the point I'm making is that the Nigerian exchange, is measuring up, is measuring well, and just as you said, is a shining star, in Africa.
All right, Prof, do hold your thoughts. We'll be back. We'll just take a short break. When we come back, we'll continue this discussion celebrating Nigeria's exchange 60 years after it started operations. It's Capital Market on Channels Television. You're welcome back. You're still watching Capital Market on Channels Television, and we're celebrating 60 years of the Nigeria exchange as some of the achievements and perhaps some of the areas that the exchange should look to moving forward. We still have with us Professor Uche Walike, Professor of Capital Market, joining us from our Abuja studio. Good to have you still there, Prof. Thank you so much. So let's talk about some of the challenges and perhaps weaknesses, of the exchange, because obviously I know this is not the best that we can have.
Yeah, of course, there is still room for improvement, no doubt. One of the ways to even, look at that is to now compare with South Africa. In terms of market cap, for example, the contribution of when we say the capital markets in Nigeria, don't forget most of the time the proxy that people use is our flagship boss, the market cap to GDP. So what is the market cap to GDP, relative to that of South Africa? What is the number of listings relative to that of South Africa? Number of listings, for example, in South Africa is close to 390. But in Nigeria, we have just about 160 companies, that are listed. In terms of market cap to GDP, South Africa is over 200%, because market cap in South Africa is about close to $1 trillion, and you have an economy that has about maybe $385 billion economy. That tells you that market cap is more than over 200% of that economy. That is not the case, in Nigeria, where it is, between 20 to 30%, of GDP. So these challenges are there, and that's one of the challenges I also see is the fact that the issuer base is narrow. Is still narrow, again, relative to emerging economies. If you look at the issuer base, it's not only narrow, it is concentrated. If you take out 7 companies now from the exchange, that market cap drops drastically. 7 companies account for over 70% of market cap. If you take out Dangote Cement, that contributes about over 20% of market cap. Okay, that accounts for about 20% of market cap. You take out Dangote, you take out MTN, the likes of Boa, Airtel Afrique, Nestle, GT, and Zenith. These 7 companies, if you take them out, the thing goes down. So that's a challenge. And again, you also notice that even the number of companies we have there does not really reflect the composition of the Nigerian economy. If you look at agriculture, for example, in the economy, agriculture contributes about 24%, to GDP, but the agri companies represented on the exchange is just 0.8%. If you look at real estate, on the exchange is just 0.2%. If you look at oil and gas, oil sector in Nigeria is about 10% to GDP, 10% to GDP, but on the exchange it's just 2%. So we want to get a situation where we have a situation in which the composition to reflect that of the economy. Other issues that I mentioned here include the low level of retail investors' participation. It's still very low. For a country with a population of 200 million, and you have just some say 5 million, some say 6 million retail investors participating, that's not too cheering.
Prof.
As a matter of fact,
Prof,
so
okay.
that is an issue.
Yes, a lot of issues, but because
yes.
Time is never our friend. So with some of these things you've talked about, for instance, it doesn't really reflect the true picture in the economy. You mentioned the issue of course, agriculture is a major part of Nigeria's economy, but we don't see that reflected in the exchange. Is there a way to accelerate, some of this, maybe attracting more agriculture companies, into the exchange? Do you have an idea of how this can be achieved?
Yes, I think the exchange is doing its own part. Trying to modernize, trying to up the game in terms of the corporate governance, governance structure. That should attract more confidence, in the market. But I also think the government has a lot of role to play to support the growth of the market in general, and even incentivize, as it were, listing on the exchange. And the government can do that, through fiscal policy, through even patronage of companies that are listed on the exchange. Okay. For example, I give an example. Corporate income tax today is 30% for large companies. Of course, we know we have the Finance Act, has introduced, progressive calibrated rates. So for large companies, it is 30%. Okay. So what stops us, for example, from saying that listed companies, should pay 28% tax? Now, the government is not going to lose revenue because if more companies come in, okay, that will also mean that more companies will pay tax. And I say that because studies have shown that the bulk of the company's income tax that FIRS collects today, come from listed companies. So if the bulk comes from listed companies, because listed companies, of course, their financials are open, public, it's difficult for them to hide anything. It means that if more companies get listed, okay, the chances of also getting more revenue from the government, even with lower tax rates for listed companies, it is higher. So I think those incentives are necessary for companies to, at least want to list on the exchange, because it has a lot of advantages, as I mentioned earlier.
All right, Prof, thank you so much for joining us this evening. And as always, you always have a lot of information to share. We really do appreciate that. And we'll certainly get you back soon, one of these days. Thank you so much, and enjoy the rest of your weekend. Professor Uche Walike is Professor of Capital Market and President of the Association of Capital Market Academics of Nigeria. And he just celebrated 60 years of the Nigerian exchange, and of course, how we can get even better. Well, just before we go, the value of the securities lending markets of the Nigerian Exchange Limited has risen to 513 million naira. That's as at the 20th of August. A breakdown of data obtained from the NGX report shows that the market grew from 7.38 million units valued at 95.2 million naira in 2020 to 6.8 million units valued at 513.1 million naira in 2021. The report also outlines an increase in stakeholders' participation, as about 2.3 million units of MTN Nigeria shares valued at 395.6 million naira has been borrowed. Other companies that have pledged their shares include Zenith Bank, Dangote Sugar, GT Co, and UBA. Well, a whole lot happening at the NGX, and I can promise you are going to further this conversation on Business Morning during the week. So do watch out and catch up with us at 10 a.m. Monday to Friday for Business Morning. We're going to have a discussion with officials of the Nigerian Exchange Limited. So join us and get more information on how they're celebrating 60 years of existence. For now, thank you so much for being a part of Capital Market today. It's been a pleasure having you. I'm Ini John Mekwa. Enjoy the rest of your weekend.